Now let's talk about the third stock that may enter the S&P 500, which is Flutter Entertainment. And Flutter Entertainment owns FanDuel, which is a sports betting app. Flutter Entertainment also owns Sky Betting and Gaming, Paddy Power, Betfair, Sportsbet, and PokerStars. So Flutter Entertainment has a number of revenue streams, and their numbers are very impressive. As we look at the Flutter Entertainment numbers, let's compare it to DraftKings, which is another one of my favorite stocks, but has nowhere near the better valuation than Flutter Entertainment. So the first thing we notice with DraftKings is that they have a negative 0.82 earnings per share, while Flutter Entertainment has a positive 2.82 earnings per share. So Flutter Entertainment is killing DraftKings with earnings per share and managing their money better. And DraftKings claims to be profitable, but I don't see it in any of the numbers. So I don't know what they're talking about when they say they're profitable, because they have never had a positive earnings per share. And in my book, I don't care how good your numbers are, if you do not have positive earnings per share that are growing higher, you're not profitable. Another important number is the negative profit margin for DraftKings. They have a negative 7.97 profit margin and a negative 3.29 operating margin. And until that operating margin becomes positive, DraftKings cannot have positive earnings per share. Meanwhile, Flutter Entertainment has a positive 6% operating margin. So they are killing DraftKings, because we do not know when DraftKings will have a positive operating margin. They could be trading flat and sideways for the next year. So until DraftKings has a positive operating margin, they are much more riskier than Flutter Entertainment. And the stock will not go up unless that operating margin improves. So I'm worried DraftKings will trade sideways for the next year until they have a positive operating margin. Meanwhile, Flutter Entertainment could be improving their operating margin to, let's say, 7% to 12% or 15% over the next 12 to 18 months. And this could add 20 to 40% in the share price to the upside. And the last number I want to look at for DraftKings is the revenue at $5 billion. And Flutter Entertainment's revenue is at $14.3 billion, which makes Flutter's Entertainment 3 times more greater than DraftKings. So we can see that Flutter Entertainment can easily grow their operating margin and increase their earnings per share versus DraftKings. So my advantage goes to Flutter Entertainment by a long shot.